I can introduce our speaker, Hans Sicat. He began his career in New York with Citicorp, or Citibank in those days. Back in 1985, spent many years working in the U.S. Later on, came to Hong Kong, also with Citicorp. In total, he spent 22 years with Citi, so a long-term employee. He did leave for a short time, went with Solomon Smith Barney. He was in Hong Kong from the mid-1990s till 2000, but around 2000, he convinced his group to set up a Philippine operation, and this is how he and his family returned to Philippines, and has been here ever since. So he co-founded a knowledge process outsourcing operation called Legis Pro, but then was brought back into the capital markets business around 2009 and sat on the board of the Philippine Stock Exchange. Over a period of time, he was convinced to join full-time on the PSC as the CEO in 2010. And since then, there's been a lot of changes in governance and systems and different operations side, the promotional side, and certainly we've seen different results on the valuations and trading and so forth. So please, if I can welcome Hans Sicat, President and CEO of the Philippine Stock Exchange, to the stage. Glad to have him.
Good morning, everybody. It's a pleasure to be here. It's great to see a lot of faces, some old and familiar ones, and certainly a lot more new faces that I've met this morning. And thank you, Richard, for the introduction. I have to thank the Asia CEO Forum for inviting me today. I think this is one of the bigger groups that I've actually will be addressing. So it's a delight to be here. Thank you to the sponsors and to Shell Ray Associates for picking me. I guess today we have a few slides that I'd like to go over. I'll try to make it quick and actually open the floor later on to Q&A. I'll go through a few slides, hopefully breeze through a number of the macroeconomic indicators, talk about the stock market for those of you who haven't been following what's happening, and then go over through our 2013 outlook, and finally discuss a few of our initiatives and challenges for the coming year. Well, as you see here, the base economic snapshot talks about a great background of having a very benign monetary environment wherein inflation is low, and we see actually that the various credit upgrades that we've gotten, including a positive outlook from S&P indicating we're probably just one upgrade notch below investment grade. It has improved the business confidence level overall, and we do believe that all this actually leads to a sustained economic growth path, at least for the next 2 or 3 years. See here are basically indicators of this solid fundamental growth. One of the things that's been bandied about lately is the high level of gross international reserves, which is the upper left-hand chart, which is at an all-time record high. What that means is that today, unlike maybe a few years ago, those gross international reserves cover about 12 months worth of imports of goods and services for the country, as well as covering about 10 years worth of the short-term external debt position. You've seen the right-hand chart talking about the fiscal position wherein the government deficit is running at a record low level, about 2%, 2.5% of GDP, and going down as a gap. This compares, of course, to the perhaps relatively scary number you see in the U.S., where the U.S. is running a fiscal deficit of about 10% of GDP. Finally, the banking sector, if you take a look at the lower chart, has more than adequate reserves, where the capital adequacy ratio is well above the required Basel III levels by the chart. Next slide. And I think a number of you in the BPO industry may have seen this too, that our economy is really being fueled by what we call the household consumption factor, and that's really fueled by two major levels. One is the OFW remittances, which are running at over a $20 billion per year level, as well as the revenues in the BPO sector. Now, one of the interesting things, which I believe I saw from a BPAP chart, is the fact that in 2016, the revenues going to be generated from the BPO sector is going to be roughly the same amount of inflows from the OFW sector, which means that there will be two legs fueling this in about 3 years, bringing in about $23–24 billion worth of revenues into the country. The Business Confidence Index, which is a survey done by the Bangko Sentral ng Pilipinas, certainly reflects all of the feel-good nature that we've been hearing around us, with a relatively high number. By the way, this is a net number, and we believe that this is a function of having both the good governance nature that's started not just from various corporates, but also from the leadership by the current administration, as well as the growth fundamentals in the economy. Now, this has resulted, if you take a look at the following slide, at these record levels in terms of the stock market index. So basically, a lot of good news flowing back and reflected in stock market prices. What you're seeing here, we had a record growth year last year, 2012, wherein the index grew something like 33%. And interestingly enough, it's only the first 2 months of the year, index is continuing to go up at about 14% this year alone. And we're probably in uncharted territory in respect of the index levels, wherein we've hit a high of about 21 times, and just the other day breached this 6,700 level. If you look at a lot of the analyst reports, this number 6,700 was something that was predicted to be what the index would be by the end of the year, as opposed to by the end of February. More importantly, how does the Philippines compare with other Asian indices in terms of performance? Interestingly enough, if you take a look at the chart, left-hand chart over the last 2 years, we have basically appreciated the most relative to all the other exchanges in Asia. And year to date, it's basically us and Vietnam at the top two levels. This is another example of how the Philippines is performing as reflected in an ETF, or for various ETFs, exchange-traded funds that actually cover various indices. So the top line, we have this chart on the left for the Asian XIE funds. They have a number of different country funds, and interestingly enough, again, we see that the PSE is the index that demonstrates the highest growth, above that of Thailand as of February. And by the way, it's the same thing when you take a look at the under indices, MSCI, the Morgan Stanley index, reflecting the same number. So what's happening in the Philippines in particular? You'll take a look at market capitalizations as a result of all this price appreciation have grown. And we've seen that market caps this year alone have grown by about 25%. If you take a look at it on a year-to-year basis through 2012, and for 2013, the lower chart, we call it domestic market cap, which excludes some of the cross-listed companies, which are the Canadian insurance companies. You'll also find out that in terms of the share of various sectors, we have a pie chart on the right-hand side, and you'll find out the holding firms and industrial firms still command the largest share in terms of representing our market. If we take a look at these other charts here, the good news again is that values and volumes in terms of our average daily trading activity has grown by leaps and bounds. Actually, if you take a look at the last 18 months, we're trading at roughly twice the value of what it was 18 months ago. And in fact, just year on year, right now, a 20% growth in terms of our average trading value. So we're trading at roughly around 212 million US dollars a day, which is about 9.2 billion pesos per each day. As I mentioned about 18 months ago, that value was only about half of it, about 4.5 billion pesos a day, or roughly around 100 million US. Now, the other interesting factor is that lower left-hand graph there, which shows the amount of capital raised through the exchange. That number last year was a record 5.25 or 5.15 billion US dollars, which actually beat out many other exchanges in the region and in the world, if you can believe that. So this basically is all the activity in the exchange: IPOs, follow-on offerings, private placements, and rights offerings. And what it tells you is that these record numbers are basically a vote of confidence in the economy, as well as a vote of confidence by issuers that raising money through the exchange is an important leg of the funding strategy of any company. This just came out a few days ago, wherein the World Federation of Exchanges, the grouping which represents all stock exchanges in the world, of which we are a member, actually cited us for being, I guess, one of the top exchanges in the world in terms of various metrics. And this includes growth in our average daily turnover, and also the growth and the amount of capital raised. So basically, it's between us and Thailand when you take a look at a wide range of metrics. So it's been a while since the Philippines has actually been compared to other Asian tigers or the ASEAN economies, and actually doing better, if not on par, with some of our peer group comparables. Now, one of the drivers, as you might know, is the fact that foreign money has been coming into the country. And I think this slide on the top bar chart shows that, where net buys have actually exceeded net sales to the tune last year of over 2.6 billion US dollars. And that trend continues for the first quarter of this year. But the more important thing, which I keep mentioning, is the fact that participation in our market is not driven actually just by foreign money. Although that was the case, that pie chart on the lower left-hand side shows that prior to 2006, our economy, or the stock market, was actually participated in more by foreign money as opposed to local money, where we had 60% foreign money basically determining the fate of essentially the index and the activity level in the country. The lower right-hand chart shows that today that actually has shifted, wherein 51% of the participation in our stock market is actually driven by local firms and local individuals, meaning Filipinos and Filipino funds that we can track. Last year, the full year average was actually 55% Filipino, which also is probably the best vote of confidence in this economy, showing that local participants believe in what's happening and believe in the underlying capital market activity. And I guess if we take a look at the various I guess comments that we hear now from various analysts, if you take a look at the comments saying that the Philippines is a key investment destination, that we are economically vibrant, we're no longer the sick man of Asia, as well as being viewed as the strongest performing economy in Asia. I think these external reviews probably demonstrate that it's not just us in the Philippines thinking that way, it's also various analysts looking at the Philippines with a global comparison, of course, as a benchmark. So we're saying, is the new norm a re-rating? And perhaps what's indicative of this upward re-rating is what happened to Indonesia and the path that they've taken over the last 4, 5, 6 years, starting in I guess 06, 07. What's happening in the Philippines is that we share very similar economic or macroeconomic growth stories, with fundamentals, inflation relatively low, the political issues being essentially non-issues today, and I would argue that the corporate sector being extremely vibrant as well. And what that's resulted in is and we've talked about this in other fora, is that PE ratios perhaps climbing as a result of this re-rating. Now, it's an interesting point because, and last week I was in Tokyo, meeting with about 41 investment firms. And the basic issue for many other funds looking at the Philippines is that we are not yet investment grade. There's been some positioning going on, but the reality is a lot of funds globally have not yet come into the Philippines because of the fact that we are not a non-investment grade country. We do believe that once we get that formal investment grade ranking, that will allow a lot more investment flowing into this country, and that should actually provide a boost for many corporates, both listed and unlisted, in terms of the ability to raise capital. So the big issue when we talk about price earnings multiple being or climbing up is what's really behind it. And I think the story for the Philippines is that the corporate sector and the listed corporate sector has actually demonstrated a very strong ability to generate huge revenue growth as well as great net earnings. Last year, the average revenue and net income growth was roughly a 20% growth for the full sector. Now that's an interesting number because this number is actually larger than what you'd see in other Southeast Asian economies. And I don't think we've had this situation again in a long time. So when people come in and say, how do I look at the Philippines? What they're really buying is this promise of increased revenue and net income growth from the underlying companies. Now that right-hand chart talks about the various increases by sector, and this data as of 9 months to 2012. And what's interesting is that the market, as I mentioned, performed with a 20% average earnings growth, even if the mining sector, interestingly enough, shrank by about half in terms of their earnings capability. So what that tells you is that all the other sectors in the economy were pulling up even the performance of the mining sector, which actually shrank. So what do we think of 2013? Our belief, and which is consistent, by the way, with international agencies as well as the government, is that there will be continued growth, perhaps greater than the 6% being projected by some of the international agencies. And we do think that inflation will continue to be relatively benign, which is a very important and necessary factor for growth in the economy. Exports will continue to be strong, and we do think, again, that domestic consumption will continue to be a very important part of this GDP composition. We'll talk about a few of the sectors whom we might think will do well. We think the financial sector will continue to do well because of this earnings momentum and because maybe they're exposed to all the other sectors combined. But I think the most important thing for our banking system and the financial system is that the capitalization ratios are extremely strong, and we don't find, or we're not in the same situation as other countries wherein the banking system is actually undercapitalized and weak. We still think that property this year will do quite well, and although of course there's been talk that the BSP is now looking at the exposure ratios of banks into this sector, as well as the various bankers saying that certain sectors within the property sector may have differing dynamics. But by and large, property sector will continue to do well as a result. On the industrial space, we think that power and energy will have to do well. I think we're at the point wherein, if I saw one of the charts earlier, that supply, at least on paper, is roughly equivalent to current demand in the country. Although that, of course, being an island nation, you have some of these gaps. And with the growth of the economy, we do think that demand for power will continue to be a very important part of the country's growth sector. Infrastructure, and those companies which are involved in the infrastructure sector will also do well with continued spending now, especially even with the government pushing some of their projects, and I guess finally getting some of these projects off the ground. In terms of the services area, tourism should do well, and of course the gaming sector, as you know, Entertainment City is coming up in the reclaimed area, and this in fact is one of the more successful sectors, or has been one of the more successful sectors in 2012, and we predict that with the finalization of one of the other projects and the announcement of maybe the third project coming up this year, this will get a huge boost. So what have we been doing at the stock exchange to support all of this growth, and in fact perhaps to even move this growth even further. We've had a wide range of initiatives, both structural, as well as I guess some of it is tactical from our end. And one of our longer term initiatives is what we're doing in the market education front. We actually have short-term and long-term projects. So we are running a few programs with various universities up to an MBA. There is also, by the way, a high school class now that we're working with the Department of Education, and there's actually a capital market subsection. And this has been piloted this last school year and has been rolled out this school year in high schools, public high schools around the country. For trading activity, it might be surprising for many people to learn that for the first time, a full year last year, we actually had afternoon trading. We now trade officially up to 3:30 in the afternoon. So that's more or less the same as what other exchanges are doing globally. And I think the results, as you take a look at the lower bar chart over there, show that as we extended trading hours, the average trading volumes and values also increased. We've continued to increase listings and have tried to also make adjustments in terms of some of our listing rules. We're awaiting the SEC's approval for some reclassification, by the way, of what we call our big board and our small and medium enterprise board. One of the big things that happened last year was that we had reenacted a regulation which required that all firms listed on the exchange have at least 10% of their total capital in a free float, i.e. traded on the exchange. And that's actually been a very successful program. If you take a look at the right-hand bar chart, at the end of 2000, or the beginning of 2011, we say 45, there were actually 47 companies that were below this requirement. It's now down, it's actually below 10. As far as we counted, I think there are about 6 right now who are below this 10% minimum. But that's important not only for corporate governance, but actually to ensure that there's enough supply of stock to be traded and available for the public to invest in. Finally, in corporate governance, we actually hived off a separate independent company for regulation. There's something called the Capital Markets Integrity Corporation, which now independently monitors and regulates broker-dealers. So that eliminates the perception, if not the view, that there was actually a direct conflict of interest for the exchange to monitor broker-dealers directly. And along with that, we purchased this total market surveillance system, one of the top-end surveillance systems from Korea. And it's now been working, and I think we've had 1 or 2 examples of individuals or listed firms that we've charged, or the CMIC has charged with violations of various PSE rules and regulations. Finally, for the issuers, we have launched the PSE Bell Awards. This is actually a good governance award which highlights those companies which are performing better than what are the minimum requirements of good corporate governance, both from the PSE and from the Securities and Exchange Commission. Now, what we're going to do as well in terms of providing that supply is we will be launching a few new products on the exchange. I think there's a different approach to what the PSE had been doing, and what's going to come up in the next month, hopefully, or next 2 months. We will be launching for the first time in this country something called the Exchange Traded Fund, which will be listed here in the Philippines. So that basically is like a mutual fund but traded on the exchange like a share of stock. This will be a big boost for our efforts to actually increase retail participation in the market. The Personal Equity Retirement Account, which is known as PERA, has been announced, and rules and the law was actually passed about 3 years ago. Unfortunately, the actual accreditation exams have not yet been held. The Banco Central and the SEC had announced that they were having the accreditation exams. I think they now moved it to April this year. But once the accreditation exams are done, that means that this product can now be turned on. By the way, what this is equivalent to the savings program, very similar to the 401k program that you have in the US, wherein there are some tax deferment features, as well as the ability to dictate where you put your savings, not just in a cash account, but also in some of the capital market products. Finally, what we call securities borrowing and lending is more for the institutional portion of it, but what this allows is basically shorting and the ability to hedge. And this has not been practiced in the Philippines in a big way, and we are, I guess, making steps such that this fundamental product gets turned on, and this will be basically a building block for us to launch other products on the exchange, which include futures, forwards, and some other derivative products. And I guess we will be launching also next month something which we're calling our Online Service Bureau. For those of you who know, here in the Philippines, there are already a few providers, broker-dealers, who basically enable you to access your accounts online through your computer, through your phone. We are launching our own system. The exchange is trying to bring down that cost of access, and we'll be announcing this in conjunction with one provider on sometime in about 3 or 4 weeks. And we believe that this is also going to spur the amount of online accounts as well as the amount of retail players in our market. We're seeing actually a compound annual growth rate on online accounts of something like about 30% per year, which is an amazing number. So we think that we can bring this up. It's important because today in the Philippines, the participation in our market is essentially an institutional participation. We have about 90% of the players are institutional players, and only 10% are actually retail investors coming into our market. So on the next slide, let's talk about some of the challenges and risks that we see. We think that the infrastructure program that the government has is a welcome program, and this obviously is the most important thing in terms of the multiplier effect for the economy. We just hope that it's faster and that more money is spent this year in 2013, because that will have a multiplier effect beyond the current year and actually stretching on to next year's. Now, the Philippines is prone to all these natural disasters. That's actually been the net issue or the negative issue for the Philippines almost every year, where major typhoons and sometimes massive earthquakes become very disruptive. There's nothing we can do about it from one perspective, except, however, be prepared for it. And we've encouraged a lot of the corporates who are publicly listed to actually have disaster recovery plans and business continuity plans in place, and I guess well practiced. On the political economy, political issues themselves are non-issues today, as I mentioned earlier. However, I guess the risk for the country is that there's a predilection here for, I guess, over-regulation and sometimes an inconsistency in interpreting rules over time. There's one thing that we are, as one of our advocacies, we're working through something called the Capital Markets Development Committee, which is chaired by the Secretary of Finance. We're one of the private sector representatives in this committee, trying to make sure that issues like these are actually listened to by our economic policy makers, and hopefully there's a reduction in this type of noise. On the external front, I think we saw yesterday that the Italian elections still have an effect on global capital markets. The global capital markets basically had a sell down, including the Philippines, mainly because of the uncertainties brought about by Italy and the whole Eurozone problem, which tells us that while the Eurozone's issues are far and away from us, certain actions continue to actually affect us on a day-to-day basis. And the recovery in the US, and including this issue of first the fiscal cliff and now the sequestration and spending, is likely to have a day-to-day effect on some of the markets globally and perhaps on the Philippines. And finally, China's recovery, while it's challenged today, is a factor in the Philippine economy. We probably don't talk about it enough. And I guess the political issue with China is something that we hope gets resolved, because it does affect trade in goods and services, especially as China is one of our important trading partners these days. I guess we talk about the issues of regulatory and legal constraints. One of our pet peeves in exchange, but that's probably because we feel we're also over-regulated. I won't go into many of these things, but I would say that, again, consistent with what I said in the previous slide, our advocacy is basically for reforming some of these old legacy regulations, and perhaps less regulation is better than more, with a wider box and the ability of firms to be able to maneuver themselves within a wider box. Obviously, we're very interested in what's happening in regional and global trends in the capital market, which means there's a freer flow of capital as well as a freer flow of goods and services. So we believe we will be part, as you know, of the ASEAN 2015 initiative, which means for us on the ground that there will be, I guess, a larger market for all of us, but also a larger competitive space for all of us operating. And as a result, our own PSE strategic plan we're launching this quarter is really focused on the development of new products. I mentioned that we do hope that at the end of this medium-term plan, we will be in a position to have rules, regulations, and maybe launching index futures, index forwards, and some of the more basic derivative products on our exchange. And we are doing that by having a three-pillar strategy of, we're calling it the market mover strategy, wherein we're being very active in terms of introducing products and the framework for these other capital market situations. We are improving and upgrading our IT component. As you might know, about 2 years ago, we bought the trading system of the NYSE Euronext, replaced our own system. That's actually that was one of the physical constraints to actually growth on the exchange. We're continuing this year with upgrading our clearinghouse system, our issuer system, even our website. By the way, I forgot to mention earlier, please do follow us on Twitter and Facebook. We have a whole social media strategy that goes along with this IT strategy. And finally, of course, our talent strategy. We have a new crop of very young, energetic guys, younger than me, running the exchange today. These guys work 48 hours a day, and I'm giving them maybe an extra hour or two to sleep. So with that, we hope that we can move things forward. And our tagline for this year, which by the way is the 20th year of the integrated Philippine Stock Exchange. We used to be two exchanges, the Manila and Makati exchanges, that we're working on all gears, working with various stakeholders, working with issuers, working with investors to try and make this market a more robust one, and working with policymakers to make sure that the underlying policies that are being crafted at the cabinet and at the legislative agenda is something that is hopefully more user-friendly to investors and more user-friendly for market participants. And I guess I'll end my talk there. And Richard, I take questions? Or?
Yeah, very good. Very good. Great work. Great work being done there, the PSE. So yeah, I'll start with a couple of questions, and please, if people can think about the questions while I'm talking. But there's been a lot of talk in the BPO sector about currency exchange rates, and given the the good news of the financial sector, if there is a large influx of investment, one might say that currency exchange rates might increase. And I know we have a number of people from the BPO sector here. I see Keith of Cognizant, William of Western Union, Sitel, Ravi is here, Point West Bang is here, and this is a concern. But what do you think about that, or what could you say? Is this a concern, or is it overrated? What do you think?
Well, it obviously factors in many of the discussions, and I think clearly the natural movement of a country that is, I guess, improving in terms of its fundamental behavior or fundamental economic indicators is one that includes some currency appreciation. As you know, that's a specific topic between the U.S. and China. Now, as it affects the Philippines, clearly on one level, it does affect our cost structures here locally in terms of how we can deliver goods and services, and certainly from the BPO sector, a very important part. But I think it also demonstrates that hopefully that the Philippines can be competitive, not just as a result of number one, low wages, and number two, a currency situation, but rather on a productive and maybe a skills basis. And this is what we are talking about with a number of, I guess, our external partners, that the Philippines is indeed a destination wherein you find a wider range of menu of when I talk about skill levels, when I talk about services and goods that are being provided. Now, it is also true that when you talk to the Banco Central, they say they don't intervene, but they only smoothen the curve. But I think that's also talk for saying that they probably don't want to see it appreciate too fast in a short period of time. But I guess we don't control that ourselves.
Okay, I'll go another one. Financial bubbles are on, still fresh in many people's memory. I don't know whether, I'm sure that people ask you this once in a while. I know it seems a bit emotional, but is there any, what do you think about that? I mean, the real estate sector has been growing tremendously over the past few years. There's some concerns there, maybe. The financial sector also. What do you think about, what do you say to people when they say things like that?
Well, I think the fundamental difference today, and I talked about it earlier, is the fact that the Philippine banking sector is very highly capitalized. In fact, the debate amongst the bankers and I guess the Banco Central here is that there has been a move for the BSP to actually require that all banks, I guess, meet Basel III capitalization ratios ahead of schedule, which is this year. And the problem for the banks is that if they do so, that profitability, of course, will be affected, or return on equity and return on assets. So the good news is that the banking sector is well capitalized when you compare that to what we saw, and certainly when we compare it to 2008 and even in the Philippine scenario, the Asian financial crisis, which affected us a lot in, I guess, 1997. So we don't have that problem. The question, I guess, of asset pricing and asset bubbles is one when you talk and take a look at nominal prices. Real estate sector, perhaps, is one issue that gets discussed. I think the bankers and the developers will argue that the supply for a lot of the real estate, I guess, units, if you will, especially in the low to medium end, has not yet been met, so there's probably not yet a bubble over there. The other question that we get is on financial asset prices, i.e. stock market prices. Are we seeing it at the height? And as I mentioned earlier, we're probably not, I should mention this, by the way, when people talk about the high PE ratio of the Philippine economy, let's say about 20 times PE. Is that high or is that low? Again, it's relative. If you look at the statistics moving back, the 20 times PE is not the highest level that we've seen in the Philippine market. That level was about 25 times, or close to 25 times in 2007 before the global financial crisis. And that level was also, or occurred at the time when corporate earnings were not as high as today, number one. Inflation was actually higher, which is a worse situation. And when economic growth in the country was lower than the 6 or 6.5%. Growth then was running at around 3.5%, 4%. So interestingly enough, one can argue that there's probably room for growth. And as earnings of companies are, or we get guidance of companies by this first quarter as how their 2013 will look, that PE ratio may not look as bad. And if you take a look at, by the way, at the PSEI itself, the components of the PSEI, there are a number of companies in that 30 company index, which is actually bringing up that index to the 20 times PE. And a number of them, or a majority of the companies, actually are trading below that 20 times PE level.
Good answer. No, everyone's shy. We got a big group. Okay, Keith, we have Keith Jones of Cognizant. There's a microphone right there for you, Keith.
Sting? Okay, great. That's what I get for starting first. Hans, great news. Everybody loves to know that the Philippines is, the economy is strong, and I think there's a lot of positive sentiment around that. Two questions I would have is, how will the exchange prevent computer-traded exchange problems that you have on the modern exchanges, the more modern exchanges, right? Because that also affects the retail investor. And then secondly, where do you see the government providing lower tax rates on investing in stocks, where they do similar to other countries where you get a discount for long-term investing or short-term investing? Thank you.
Well, on I guess the first question, like any exchange, and IT is a central part of our operation. So clearly, we don't like system stoppages. We don't like system crashes, of course. That's a no-no. I think our upgrade program hopefully is an important one. We're very cognizant of of our role in the economy. We have not had a stoppage due to, let's call it, a system crash, if you will. That's good news. And I think all these upgrades that we're doing is actually part and parcel of making sure that we have redundant systems and we have maybe overcapacity even at peak times. I think the other thing to mention is that on the program trading front is that we are already an all electronic exchange, and actually this situation happens when we have what we call program trades of big institutional investors directly connected onto the exchange. It's called direct market access. We are actually in the process of having what we call limited DMA. What that means is that big institutional investors still have to be sponsored by their own broker dealers. So it's not like just any, let's say, large institution being able to connect directly to the exchange and basically have all these program trades move markets up or down by themselves. So there's essentially a stopgap measure there. We are electronic, but it requires a broker dealer to be in between electronically with their institutional investor. The second part is that we still have what we call circuit breakers, up or down. We have automatic cutoffs, so if the market is moving too fast up or down on a particular stock or on the market, these circuit breakers will come in. So far, we have not been, or we have not had a chance to utilize them, fortunately. So I think that's on the good news. On the taxation front, again, one of my favorite topics. Of course, those of us who are investors love lower taxation as opposed to higher taxation, but we also do recognize the government's desire to increase taxation revenue. Obviously, for us to get to the investment grade level, it's one of their issues. But I should say the following. If you actually trade on the exchange, investors there are taxed at what we call a final stock transaction tax of only 0.5%. In or out, it's a final tax. So the government cannot and should not be taxing you on capital gains if there is one. So capital gains in this country run 10% for long-term holdings, if I'm not mistaken. However, if you are not on the exchange and you do a private transaction, that's when the government comes in and says, if there's a gain, I now tax you on the regular capital gains, or maybe try to get you a normal income. That's a discussion that we are still trying to, I would say, champion in terms of trying to expand the benefits of being or working with the stock market, and hopefully expanding it to maybe not just on market transactions. But I think the government has given us a huge leeway in that. So basically a 0.5% versus a capital gains tax of 10% is, well, 1/20th the taxation value. So there's a huge incentive to actually trading on the exchange today.
Very good. We have a question right here. Yes, go ahead, sir. Yeah.
Okay, I'm Dr. Hermi Paye, and my question is about the market surveillance system. I am both retail and institutional investor. Is this system linked up with the Congress or Department of Justice or Malacanang? Because I'd like to know about this, because my experience back in the States has been with President Obama, that he is really going after inside trading. And I'd like to know if this is going to happen here in the Philippines.
That's a great question. I think, well, first of all, I would say that our surveillance system is linked directly to our trading engine. So it basically sees everything that is being done by any broker dealer, and also will demonstrate behavior. The Capital Markets Integrity Corporation actually, although we fund it, is an independent company that actually reports directly to the Securities and Exchange Commission. So to a certain, and in fact, yesterday, the Securities and Exchange Commission basically just signed another agreement with the Korea Stock Exchange to buy also another system that is complementary to this system, so they can see what's happening. I should say that the exchange has been doing a lot in respect of making sure that the old abuses do not happen. So first of all, we have an example of one firm that is already being charged and is actually the proprietor is actually right now in jail. It's the first example of a broker-dealer and white-collar crime being rewarded with some jail time for actually fraud. The trial is ongoing, and we hope it takes its natural course. So that's one end. Number two, just late last year, there was another example wherein a number of individuals and some brokers associated with it were accused of trying to manipulate the share price of one small firm, and they have been charged. This investigation was very public, talking about the Kalata shares. So I think what you're seeing is now the ability of the exchange, or at least of the independent company monitoring broker dealers, being able to find out real time what's happening and basically being able to prove, I guess by following the activity, certain issues and abuses that may have gone unnoticed in the past.
Very impressive. I had no idea you guys were so advanced on that. Very nice. Another question from Bert Manabat of Manabat San Agustin.
Yeah. My question is related to corporate governance, not within the PSE, but among listed companies. I understand there was a move to create a Maharlika board a year ago to promote corporate governance among the listed companies. Would you know the status of that right now?
Sure. I'll give people some background. The Maharlika board, as we named it, was an initiative to basically create what we call the Good Governance Board. And basically, the idea there was to have companies which subscribe to a higher level of corporate governance, transparency, and disclosure to be listed on this particular exchange. This idea isn't new. It's basically copying what the Brazilians did and when they launched the so-called Novo Mercado about 10, 12 years ago. Our approach has actually changed. We are still on the path to launching the Good Governance Board. We're actually now linking it to our PSE Bell Awards. So the difference is originally our thought process was that we would publish the list of rules for this Good Governance Board and wait for companies to come and basically demonstrate that they would be in it. But the experience of Brazil was that it took them about 2 years for the first company to actually list as a good governance company. We've changed the approach by saying now that we are awarding companies who are meeting this higher standard through our Bell Awards. And over the next 2 or 3 years, those companies which consistently are in the Bell Awards category will now form the backbone of the Good Governance Board. So then we will officially launch the Good Governance Board, wherein these repeat winners will basically be the, I guess, the poster boys for good governance.
Very good. Oh, good. Buds Wenceslao, maybe use the one to your left, Buds. This is Buds Wenceslao of Asiana City.
Yeah, hi. I know that in the past administration, the REIT law was one of the flagship projects of your predecessor. The law was passed in 2009, and I think up to now, no one has availed or has tried to actually enter it. Would you have an idea on what the progress is in mediating between what BIR wants and what the stakeholders actually need?
Sure. For those of you who don't know, the background is the Real Estate Investment Trust law was designed so that, in fact, we could create and launch REITs here in the Philippines. You're right, the law was passed. Unfortunately, when the rules and regulations came out, the rules and regulations were so tight and, in fact, basically not attractive for developers to actually come in. And one of the issues that actually came out was the fact that the government wanted a higher taxation level on a product that we designed to have no taxation in terms of the VAT on transfer of assets from, say, a developer's original company into the REIT company. What's happened right now, we're championing this discussion, but I think we'll need to wait. My own view is that the SEC is open to actually discussing some of the finer points of this, and however, the BIR and the DOF have not yet signaled whether they're willing to actually take out the tax that they imposed on this REIT structure, even though no one has come forward. So my view is that the DOF will probably wait until we are actually an investment grade country, so probably towards the end of this year, before they will consider relaxing that taxation issue. But once that's done, we think there's nothing stopping really the REITs from actually coming out. As you might know, before as the rules and regulations were crafted, we actually had 3 deals on the table, each of about $1 billion each, which were ready to go. But unfortunately, the taxation regime did not make it attractive at all.
Thank you.
Good morning. I'll be extremely brief. First of all, welcome to Enderun Colleges. It's very good to see you. Enderun Colleges is no longer just the premium culinary school in the country. We are now also a full-fledged business school. And that started in 2009. We're graduating our first business class this April. We are the new kid on the block for business colleges, and how are we trying to differentiate ourselves? By being extremely career-oriented. And by that I mean we're focusing only on niche careers. For instance, we give our finance major in wealth management. We give our management major in operations management, in business process management. We give our marketing major only in digital marketing. So it's very niche-oriented. And we have also a program in entrepreneurship for the family enterprise. And this June, we're rolling out a new degree, Bachelor of Science in Technology Management. In the back burner are a couple of ideas. We might be rolling out in the future a Bachelor of Science in Fashion Design and Marketing, one in Entertainment Management, including casino management, and one in Sports Management. But those are in the back burner. How do we try to focus on careers? By one thing. What differentiates our program is a very, very long internship for the students, typically 1,000 hours. So the student, before graduating from this college, has got to do 2 long internships with industry partners like you guys. And in that context, we would like to invite you to join us to be an industry partner. What you will benefit from will be value-adding interns to your staff. We are also partnered academically with what Financial Times has ranked the #1 global MBA program in the world, which is Thunderbird School of Global Management in the US. So we actually offer courses of Thunderbird in school here. Okay? And last but not least, I will put my bets that we probably have the best assembly of faculty in this college, because most of us are part-time faculty. And part-time faculty are teaching only those subjects which they are good at. I already have 60 part-time faculty. If any of you want to teach, please let me know. That's all I want to say. The last thing I'd like to say is also we are also heading the new Chamber of Commerce for Taguig City. It's being launched this year, and we are inviting anyone who has an office in Taguig to please join us. Among the benefits that you will get are we can process your APEC card for your travels. Thank you very much.